Your cash is dying. 6 safer assets you should hold instead. Every single day, your cash is losing value quietly, silently, and faster than most people realize. While you see the same number in your bank account, what that number can actually buy is shrinking. Inflation is accelerating. Banks are paying almost nothing in interest, and the financial system is becoming more unstable than ever. The truth is simple. Holding too much cash today is one of the biggest financial risks you can take. That's why the wealthy don't store their money the way average people do. They move it into assets that actually grow, protect, and survive economic shocks. And in this video, we're breaking down the 6 assets that are safer, stronger, and smarter than keeping your cash trapped in the bank. In a world where inflation quietly eats away at your money every single day, keeping large amounts of cash sitting in the bank has become one of the most dangerous financial habits. Millions of people feel secure because they see a number on their banking app. But in reality, that number is shrinking in value month after month. And the banks certainly won't tell you that. They don't remind you that interest rates rarely beat inflation. They don't tell you that the purchasing power of your savings is falling faster than at any point in the past decade. And they definitely don't mention that, historically, cash has performed worse than almost every other asset class in the long run. In today's video, we're going to break down why holding too much cash is a silent wealth killer, and more importantly, we'll walk through 6 assets that are far safer, smarter, and more protective than letting your money rot in a savings account. These assets are used by the rich, by macro investors, and by regular people who learn to stop relying on banks as their only wealth storage. So if you want your money to grow, to hold value, and to survive whatever happens next economic slowdown, inflation, recession, or currency devaluation, then stay until the end. This video may completely change how you view your bank account. Most people keep cash in the bank because they think it's safe. They assume the number in their account represents real, preserved value. They believe the bank protects them. But this illusion is built on 2 big misunderstandings: inflation and opportunity cost. Inflation is the invisible tax the government doesn't need to vote on. It eats away at savings in a way that feels slow, but the long-term impact is brutal. When inflation sits at 5%, your cash loses half its value in less than 15 years. At 8%, that timeline drops to 9 years. Even if banks offer 1 to 2% interest, you are still falling behind. And unlike market volatility, inflation never takes a break. It compounds against you in the background, silently reducing what you can afford. Then there is opportunity cost, the returns you miss out on because your money is stuck earning almost nothing. If you had invested that same cash into productive assets, you could have benefited from compounding, growth, and diversification. Instead, the value erodes while you wait for a perfect time that never comes. The truth is simple: cash is useful, but it is not a long-term wealth asset. It's a tool for transactions, emergencies, and stability, not a place to store value. That's why wealthy individuals never hold large portions of their net worth in cash. They keep enough for short-term needs and put the rest into assets that are inflation-resistant, income-producing, or store value far better than a bank account ever could. So let's explore the 6 safer and smarter alternatives. The first asset class that outperforms cash in nearly every economic environment is short-term government securities, specifically Treasury Bills, or T-bills, in the United States. These instruments are considered one of the safest places in the world to park money, and they play a major role in protecting wealth for governments, pension funds, institutions, and billionaires. The reason they outshine cash is simple: they offer higher yields with extremely low risk. When central banks raise interest rates, T-bill yields rise as well, giving investors a stable return far above what a savings account provides. In many countries, short-term government bonds currently pay between 4% and 6% annually, meaning you immediately beat inflation, or at least stay close to it. T-bills are also incredibly liquid. They can be sold anytime, and they mature quickly, in 4 weeks, 8 weeks, or a few months. This makes them the perfect alternative for people who want the safety of cash but with actual return, not the illusion of safety that banks sell you. Even better, T-bills eliminate many of the systemic risks that banks carry. If a bank collapses, you rely on deposit insurance, but government debt is backed directly by the full faith and credit of the government itself. That's why wealthy investors and institutions often keep a large portion of their cash equivalent allocation in short-term bonds, not in banks. If you want your savings to stay safe yet productive, T-bills are one of the smartest starting points. Gold has survived every economic collapse in human history. It has outlasted empires, currencies, wars, market crashes, and inflation cycles. When people say gold is old-fashioned, what they really mean is that gold is timeless. Unlike cash, which loses value every year, gold tends to rise during periods of inflation and uncertainty. It's not tied to any government, it's not dependent on monetary policy, and it's not vulnerable to banking failures. That's why central banks around the world still buy gold in massive quantities. They know gold is the last defense against currency devaluation. Silver and platinum also serve similar roles. But gold remains the strongest safe haven asset because of its unique combination of trust, scarcity, and universal demand. When economies weaken, gold strengthens. When currencies lose value, gold stabilizes. When stock markets crash, gold becomes a lifeboat. You don't need to become obsessed with gold or put your entire portfolio into metals. But having a portion of your wealth in gold-weather physical bars, coins, or gold-backed ETFs gives you protection that the bank cannot offer. Gold does not depend on digital systems, banking networks, or interest rate policy. It simply holds its value because the world has agreed for thousands of years that gold equals wealth. Real estate is one of the greatest wealth-building tools ever created, and income-producing properties are especially powerful. Unlike cash that bleeds value, real estate offers 3 layers of wealth protection: rental income, appreciation, and tax advantages. Properties that generate consistent rental revenue create a stream of passive cash flow that can keep up with inflation or even outpace it. At the same time, real estate prices tend to rise over long periods, especially in high-demand areas, giving you capital growth that cash can never deliver. And on top of that, many governments provide tax incentives for property owners, reducing tax burdens and increasing long-term returns. Even during economic downturns, real estate remains one of the most reliable stores of value. People will always need a place to live, and essential housing tends to remain stable even when markets become volatile. Real estate also offers leverage opportunities something cash cannot do. With a mortgage, you can control a large asset with a relatively small down payment, multiplying your returns if handled responsibly. The key is focusing on high-demand, income-producing properties, not speculative real estate that depends on flipping, hype, or rapid appreciation. Real estate done correctly can become the foundation of long-term, inflation-protected wealth. Keeping cash in the bank is not inherently bad. Cash is essential for emergencies, stability, flexibility, and short-term expenses. But relying on cash as a long-term store of wealth is a mistake that millions of people continue to make. Inflation, opportunity cost, and monetary policy guarantee that your money loses value every year. The wealthy understand this. They hold just enough cash to stay liquid, then they move the rest into real assets that produce income, resist inflation, or grow in value over time. The 6 assets we covered today: Treasury bills, gold, income, real estate, dividend stocks, productive businesses, and high-yield cash equivalents, offer far more stability and protection than a savings account ever could. They represent the smarter, safer approach to storing wealth, especially in an era where money loses value faster than most people realize. If you want to protect and grow your financial future, the journey starts with one decision. Stop letting your cash die. Start putting it to work.